Hey everyone, welcome. It's good to see you guys. Sorry for starting an hour late today. I was just not feeling up to weather. I just need a little bit of a rest to get my energy back, and here I am. So hopefully your guys' day went really well. Let's go over and see what we did in the market. Oh, before we do that, it's finally ready. The software that I've been teasing and I've been trying to show you guys, we're ready for a launch. So I'm super excited about that. If you want to join me for the launch and just sharing with you guys exactly what the software does, how powerful it is, you can join me on Saturday at 1 p.m. with Roger. We're both going to unveil it together. So if you're interested in that, you can go to the link. I will pop it in the chat and you guys could go there, or it's getthetradingpub.com/options-gex-dashboard-lp-sms-int. It's a little long, so it's probably easier to just jump into that chat and grab that link if you're interested. All right, so hi Lise, good to see you. Hey Kevin. All right, so let's take a look at what happened today. So we had an interesting PPI report this morning. Now, if you guys recall what I've been saying over the last couple of weeks is I didn't think there was very many reports or there was any known reports that could really move this market. And it seemed like maybe what I said might have been wrong this morning, because when we got that PPI came in really, really strong. It came in much better than anyone thought it would, with the year on year down at 2.6 and the month on month down 0.1%, where the consensus was that it would be up at 0.3 and the year on year would be at 3.3. Did I say 3.3? 0.3 for the month to month and the 3.3 on the year to year. So obviously, the PPI looks much better than we thought it would. And that means the Fed doesn't really have to be as concerned that they might send the economy into inflation again if they start cutting rates. So that should have been really good news for the markets. And it was. SPY gapped up at the open, and then it traded higher. But what's really interesting is that throughout the day, it's just started trading lower and lower and lower. At one point, it was almost where we had closed yesterday. And so the high yesterday was 650.86 and the low today was 650.63. So there was an overlap between that high and the low. So we did kind of erase that gap, and we ended up at 652.21, which is up 0.29%. which is not that much. So basically, it ended up being just a choppy day. So actually, what I ended up being right about my commentary, which was that, hey, there's not going to be a lot in this market right now that can really send this market a lot higher. It looked like I might be wrong, but it turned out that the market sold off on that news, and here we are just chopping sideways again. So yes, can we drift higher? Yes. Are we drifting higher? Yes. Is that a huge bull run upwards? No. So far, we haven't seen that yet. The PPI number hasn't been able to do that. And we'll see if we get another really good print on CPI tomorrow. Maybe those two combined can start giving this market some momentum. But so far, it's just still chopped sideways. All right, so what we need for this market to really gain legs is if that CPI report goes really well, then what we really need to see is the QQQ start to take the lead over the S&P 500. As you can see right now, it's maybe, I would say about the same as the S&P 500. Not significantly better, not significantly worse. And then we want to see the RSP even out, or I guess the RSP doesn't have to, because we could still continue to be led by tech and by mags, but the QQQE does need to. So the QQQE is looking terrible. It is not reflecting what the QQQ is, whereas the RSP is looking okay, not stupendous, but it is here above its EMA 20 that did hold, and it could bounce upwards. The QQQE is down here, still below its MA 50, still rejecting that MA 50, and down below its first three shorter moving averages over here. So QQQE still not looking that great, and for a strong QQQ growth, we do need more participation than just simply the MAGs. Let's take a look at MAGs. MAGs still very strong, very clear uptrend. Even though we didn't go higher today, it's still above the EMA 8. That's still a very, very clear upward trajectory. And then SMH, let's see how chips are doing. Not bad, not bad. Matching this high right here, bouncing a little below that MA 50 and going upwards, re-challenging this high right here. So let's see, Nvidia back in play? Nope, not quite, but it did make it back above its MA 50. That is a strong sign, a positive sign for Nvidia. So if people start getting excited about Nvidia again, then we could have the whole MAG situation pulling the market up again. That, of course, wouldn't be a strong bull market. That would be a thin bull market, but it could bring the S&P 500 higher. Hey, Peter. Hey, Kevin. Or thanks, Kevin. I already said hi to Kevin. Hey, Kay and Tristan. Great to see you. Great to see you. Yes, everything's good. Thank you. So maybe I'll show you guys some more of the software, and maybe we'll hunt for some opportunities using that software. I think that could be kind of fun. So before we do that, though, let's take a look at the rest of the MAGs. Amazon. It's doing okay. Not today's sell-off is a little disconcerting, but not too bad. It did hold the EMA 20, so that's not too bad. We got, I don't know if Netflix is the Mag 7, but it's close to the Mag 7. It's Mag 7 adjacent. Not particularly strong. Apple, today took it down quite a bit. It was looking very strong, but it did break above that MA 200 and then pull back and then go higher. So this isn't too bad. It would have been better if that EMA 20 held, but at least it held the same lows right here. I mean, it could go a little lower, and we still call that holding the same lows. And then Microsoft, not looking particularly strong. So far, it looks like it's mostly being carried by Nvidia and Amazon. And then the one I really wanted to check out was Tesla. Why Tesla? Because the solar sector, as we discovered, was it yesterday or the day before? The solar sector is doing really well. I think it was the day before. Solar sector is doing really well. Alternative energy, and if we ignore, so ugly. But if we ignore how choppy this has been lately, let me get rid of some of these lines. Okay, that's probably helpful. So look at the size of these wicks recently. It's a lot better if I scale it down. But when we're looking like this, that was looking really, a lot of really long wicks and shadows. So pretty messy. And what's starting to happen right here, it's hard to tell because it's so messy, but this is starting to look kind of like this, which I told you guys a few days ago is an institutional accumulation pattern. I shouldn't draw it like that. I should draw it like this. Okay. And this, some people, like if you like a cup and handle pattern, which I don't, but a cup and handle pattern is really just a subset of this institutional accumulation, except it only did it twice or 3 times. Okay. So this is several, it's getting shallower and shallower. It's meeting this resistance price right here. And this is a buy campaign. Okay. Buy, 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 buy. And how much lower can it go? Can it do this and then do this? Maybe. But at that point, we just call it chopping sideways until finally it breaks out. So Tesla looks like it could go, especially since it is included in a lot of what's it called? Solar ETFs. And the other thing that it is included in is ARKK. It's one of the, if not the largest holding in ARKK. Let me make sure I'm not lying through my teeth. Let's check on that. Like it used to be during COVID times, it was. So I need to update myself and make sure that I'm not wrong. Yeah, number one holding in ARKK at 10.82%. The next largest is Roku at 6.65. So Cathie Woods has Tesla in the ARK fund. The ARK fund, right, being small cap stocks, high leverage, high growth, small cap stocks, small cap stocks have been doing very well lately and starting to play catch up with the rest of the market. But you can see the ARKK is sort of the leading edge of the small cap stocks. So if we go to ARKK, it is kind of bouncing. And what do we see on ARKK? We see the same thing. Same thing. Okay, come on. Okay. So it could be that Tesla causes ARKK to break out, or if there's more interested in ARKK, well, ARKK has to keep their balance. And so if a whole bunch of cash goes into ARKK, they're going to go out and distribute that cash. They're going to buy more shares of everything. And the 10% of that new cash, 10 to 11% of that new cash is going to go into Tesla. So either way, whether the interest is in small caps or the interest is in solar or electric vehicles or directly in Tesla, that is all to Tesla's advantage. Because either way, money will find its way into Tesla. And so if I look at TAN, this solar, is this part of TAN? Nope, not part of TAN. It's part of cars. It's part of cars. Yeah, it's the second largest holding in cars. So electric vehicles and future mobility. So whether it's EV or it's ARKK or small cap stocks and then indirectly ARKK, or we have direct interest in Tesla. Tesla is looking like it has there's no guarantees, right? No guarantees, but it looks like it's high potential for a breakout upwards. Okay, and if Tesla goes, then as part of, let me just make sure Tesla's part of MAGS. Again, I don't want to lie through my teeth. Does it not have constituents? Magnificent Seven. Oh, it's not part of them. Okay. Okay. This grouping reflects the original list, which included Tesla instead of Broadcom. Okay, so someone took out Tesla and replaced it with Broadcom. That's interesting. Okay, well, still, some people will still consider Tesla as part of MAGS. Either way, it's a really large cap stock. It doesn't matter whether or not it's part of MAGS. If Tesla goes up, it's going to have a large influence on QQQ. It's going to have a large influence on SPY. And so that's going to keep us slightly leaning bullish, or at the very least chopping sideways. So there's no reason for us to feel bearish in the immediate future, because we got all these things kind of propping up the market at this particular moment in time. What are my thoughts on OKLO today? I mean, we were expecting it short term to move upwards, and it kind of did. It sold off, unfortunately. Let's see how that call option that we chose looked. Let's see, option strat. All right, down a tiny bit on that option, simply because it pulled back a little bit. So that close is slightly lower than yesterday's close. But we chose this one because it looked pretty good. And it looked like yesterday that we got that reversion, the short-term to long-term trend. That generally is a longer-term move, but we decided, or I decided, that I wanted to pick an option based on a short-term move, but based on movement until Friday. Right? So today is Wednesday, right? So 2 more days. So perfectly fine. It looks perfectly fine to me. So it would be sort of like this, and then we have a red day, and then we have a green day. And then this time, instead of a sell off downwards, maybe it'll break upwards. But I chose a very short-term option until Friday. So if this is today and this shoots up tomorrow, then what do I care? Well, you'll just close out the trade because the target was 79. And maybe because of this, we don't target 79 anymore. Maybe we target 78, or what was this high today? The high was 76.7. We could probably do better than that. I would say, 77 and a half, 78, 79. It's just super short-term trade. So still looks good. Still looks good to me. I just might revise my target slightly lower since we didn't really make any progress for 1 out of the 3 days we were going to hold it. Okay. So that's how I look at things. But remember, I have a trading plan. I have a plan that says exit if we hit 70.5 and exit if we hit 79, or if it just stays in between until Friday, then I just exit on Friday. So either I'm going to stick to my plan, or I'm going to let this 1 day of movement kind of freak me out, and I start changing my plan. That's how you start failing. Okay, so because I notice what I said, maybe I update it and move my target lower. Then I didn't say, I'm also going to change my stop loss. And now what I do, if I just leave it at that, then I no longer have the reward risk ratio that I was looking for. And if you remember, on the option, I was looking for a 1-to-1 reward risk ratio because I was counting on the probability to give me the edge. So what I told you guys was a big no-no. That say, hey, let's just move the target. Maybe I'll move the target down to 78 or 77 and a half. And that's what a lot of people might think, right? And that is why we set a trading plan, because it's easy for us to fall into that trap. It was easy for me to, before I even thought about it, it just off the top of my head, I just blurted that out of my mouth, right? That's a big no-no. So at least I was able to catch myself and say, hey, no, we have a plan in place. That is why we put the plan in place, so we don't make stupid little mistakes like that. So no, everything is still fitting within plan. We did not hit 70.5. We did not hit 79. And I have 2 more days in this trade. So that's what I think about OKLO. I think I have 2 more days in my trade and in my plan, and we haven't hit any of the targets yet. So far everything's still going according to plan because it's still within my range. That's the proper way to think about it. That's the professional way to think about it. So I guess I'm still a little groggy. I'm still not at 100%, but I'm glad that I was able to catch myself on that. Discount printing experts, good to see you. QQQ made an all-time high today, but quickly gave it up. Yes, same as SPY, that's correct. Google is still strong. Oh, thanks. I did not look at Google. Google's looking amazingly strong. So this is probably the strongest of all of them so far. Google is stronger than Amazon, stronger than Nvidia. That is very, very strong. It's hard to chase into that though. You would want a pullback or at least a consolidation before you could go into Google. I did have that nice Google, what was it? The vertical spread. Did I share that with you in the post market? I don't remember. Let me see. I don't want to claim a trade that I didn't actually tell you guys about. Let me see. Is this one of the programs? Well, in any case, either in the post market or in one of my programs, I had a Google vertical spread that was before this gap up, but it was already making money before the gap up, and then basically hit full price on the gap up, and so I just took it off early and just kept on going. But it's going to be hard for you to do anything like that unless, if you really wanted to, you could do a vertical and say, hey, defend the gap, but you're not going to make a lot of money doing that. If you did like a 225 or 227.5 Google vertical, call vertical, just price that out real fast. See if it's even worth. But otherwise, you would just wait for a pullback. Is it Google or Goog? Yeah, Goog. Okay, build bull call spread at 227.5. Yeah, you're not going to get paid for that. It might be okay out to the 26th. It's 2-week trade, and if you could get it at like 200 or 205. $22% for 2 weeks. That's not bad. You could just treat it as an income trade. That's okay, but you'll probably get better opportunities than this than Google. But that would be an okay. Let me just save this and say this is an okay trade. Okay, income style trade. Okay, and does that say Layla? I don't know if those are I's or L's. May I ask, when the gamma pockets are reached, then what happens at the option chain? Right, today they got hit and then the market fell. I'm not sure I fully understand your question, Layla, but there's no guarantee as to what will exactly happen when a gamma pocket is hit. So we need a lot of context before we can guess at what that, and it will still be a guess. What we are guaranteed is that there's a large reaction, especially by the market maker, when we get to the gamma pocket. It'll depend on the rest of market participants on exactly what that means. And also, do I have gamma levels immediately above and below? There, a lot of things have an influence on what happens. So sometimes, for example, if we have just say we had a 240 gamma pocket on Google, we go over there and it would pin and it would start consolidating, even not just for the day, maybe even for several days, it would consolidate across that. But other times it hits it and it rejects. And other times it just hits it and then accelerates forward. Normally that's usually the rarest case, and normally there has to be gamma pockets above it in order for it to hit it and then accelerate upwards. But most of the time we'll see a pin or a rejection of that level. So it just moves up, pull back, and then it gives you another opportunity to target the same gamma pocket and then maybe break through it. So it just depends on the rest of the market and what the gamma structure looks like. Gaston, good to see you. How about Amazon off the 8 EMA? Amazon off the 8 EMA. Well, it's a little below that. I guess at this point, if you went to Amazon, it would be off the EMA 20. I would consider that the EMA 20. Or let's just for fun, let's just take a look at EMA 15. know Roger likes that. Yeah, slightly below the EMA 15, slightly above the EMA 20. So I would consider a bounce off of the EMA 20 right now if it went up. The challenge is that this is such a large bar on that drop. So when you have a large bar like that on that drop, and it's not a gap, right? It's just a large bar. So here was a gap down, we stayed down there for a couple of days and then we gapped right back up. But for a large bar like this, the challenge is that you tend to get inside days, meaning that it's not going to move all that much for a few days. So let's say this is a pretty large bar, and then the next several days it just chops sideways, right? I mean, it did go a little bit higher, but for the most part, it just chopped sideways. Here's a large bar. For the next 3 days, it chops sideways. So I would wait. A large bar, I would wait for a period, for that period to chop, get outside of that, get outside of the range. And then you'll see that the tendency, so here, another reasonably large bar, 1, 2, 3 days before it finally broke out of that. So personally, I would wait a couple days and see if it starts trending, because what could happen is that it hits this and then you have 2 tiny bars over here and it drifts lower to the MA 50. It may not bounce off the EMA 20. So, and then if it does bounce off of the EMA 20, it will be bound by this range for a couple of days. But at the very least, I want to see it upwards and challenging near the top at the high. And then I would be more comfortable of it breaking above this bar right here. Yeah. The gap came from the news that Google didn't have to break up its company. Oh yeah, this gap up right here. Yes, that's correct. All right, see you, Tristan. Have a good day. And Manny, where can we see the trades saved in option strat? Those are, well, this is my option strat account. So these are just trades that I threw in there, either because I have these trades on or because I've shared some of these trades with you guys in the post market. And I obviously post market, I can't actually take the trade, or I can't even put it into a paper account. And so this is how I track trades if I share them with you in the post market live. Okay, so let's take a look. It could be fun. Let's take a look at our sectors and then see, let's hunt for some opportunities using the software that we're going to be introducing on Saturday. So let me take a quick look over here. Boat shipping. Oh, how do our ST&G trade go? Yeah, so a few days ago we had that gap up. I think I mentioned this already. Yeah, and then this is large bar, and look at what do we have? We have 2 inside days. So it looks like this one may have started to challenge the bottom, but if it goes back up, then we're going to be consolidating over here for a little bit. So even though, at least at the time when we put on, or I shared this trade with you, it was a breakout of this. It did move higher, then it really jumped up over here. And then the next significant level is way up here. But we're probably going to consolidate for at least 1 week or so, or sometimes it's just 3 or 4 days, but normally about a week or 2 before it start heading higher. There may even be a gamma pocket up here. Might as well take a look and see if there is. Okay, so yeah, shipping is doing well. So we could, if there is a gamma pocket up here, we could target it. We've got one at 60. And that's the major gamma pocket at 60. So nearer term, so on my chart that I shared with you guys, it was looked more like 66. So the options community will, so it looks like right here at 59.5, there's another less important level. So 59.5, which is actually the top where we hit on this big bar right here. So there was that gamma pocket that it did get very close to and then reject. But that is also a less significant level than the ones that I drew. But significant, not insignificant, I should say. So let's find out what the expiration on the majority of that exposure is. Actually, so it could either be September 18th or all the way out to January 15th. And if it's all the way out to January 15th, I'm not interested anymore. So hopefully it's over here on September 18th. And then what we could see is that after the September expiration, that knocks everything loose and then it goes even higher. Okay. So I might time it so that I enter on September 18th. Normally I don't like to enter on Fridays, but if this is the case, I don't know yet, we're about to find out that if this expiration goes away, then, sorry, if this, what am I saying? Yeah, if this goes away, if we hit 160 by September 18th, and this, all of this floats away, then that frees us up to move up to the 66, and maybe these strikes start growing. That 65 starts growing, that 80 starts growing. Okay, so 65 would coincide with the 66 level that I drew on the chart. It's close enough. Remember that the lines that I draw are never super precise. They're always regions. So 65, 65 and a half, 66, all roughly the same price. And over here, that gamma pocket was at 80, and I drew another line here at 75. So not that 75 isn't yet showing up on gamma. So let's see our expiration. If I do all of them except for September 18th, let's see what that looks like. Okay. And what we see is that 60 is still there, but it was not nearly as big. What does that say? Only 500,000. Only 500,000. So we lost about 1 million. Let's put it back. Oh, no expirations. How did that happen? Okay, let's do all. And we had 500,000. And now we do all of them except for September. And make sure that it's stuck. Yep. And we still have that 60 there. Okay, well, so that doesn't change that doesn't support what I was saying earlier, that we could move higher after the September 18th expiration. So in this case, I would wait. I wouldn't try to preempt it and go in on September 19th. I would wait until I saw that consolidation area actually break. So I want to see this break above this high right here, and then we would target 65 to 66, and then see if it pauses there or not. If it pauses there, then when that pause ends, then we'll target 75 to 80. Okay. All right, let's see. What are the difference between your GEX options and Gamma Pockets programs? Oh, yeah. Is it good if I stay one of your programs? Sorry, I don't understand that second question. Is it good if I stay one of your programs? Yeah, sorry, if you could restate that, I don't know exactly what you're trying to ask right there. But your first question, the difference between the software, well, one is software and one is a service. Okay, so one, I actually look for opportunities and I just give you, hey, I think we should buy this right now. And this software allows you to look for your own opportunities, allows you to evaluate. So let's just say, what's a stock that you guys are really interested in? So give me a stock that you guys are really interested in, and give me a trade alert that you recently received from someone else, not me, from someone else. And then we'll see how we can use this software to take a look at stuff. Do I trade big news days like tomorrow, or you just wait for the news first and then look? Normally, I wait for the news. Okay, so I don't trade news. Then plus news only tends to have an effect for 0 to 3 days. It doesn't tend to stick. So if I'm okay with the volatility, I'll trade anyways. I won't trade because of the news. I won't try to anticipate that news, but I'll trade because I have my trade idea already and I have my timing says it's time. So I'll trade through that news and not care about it, or I'll wait for that news. If I care about the volatility, then I will wait for the news to pass. Oracle and GE. Okay. So, and BP. Okay, so let's just say either you're interested in Oracle or someone gave you a trade signal on Oracle and we look at this thing and you go, oh, okay, earnings were really great and there was a huge gap up. And so normally I would not be trading this. Why? Because of the exact same reason as STNG. Right? Gap up and then what happens? It just kind of does nothing for a little while. You would want to wait for that to pass you by. So Oracle. So what happens here with Oracle is I would wait for that high. I would draw a line at the high, or maybe I'll put a trade alert at the high if I was really interested in Oracle. Come on, line, 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 line. Okay, and then I would do the same thing at the low. And anything in between those two values is going to be an inside day. And then I wait for it to break above or break below. But let's see what gamma levels are here on Oracle. Did I already load Oracle? Yeah, I already loaded Oracle. Okay, so we had the big gap up. You can see right there, that's the huge gap up on earnings. That's just today. And look where all our gamma levels are. You see it right above here, and that's 380, but there's a more significant one at 350, and then a big significant one here at 300. Okay, so we can see it right here, 300, and right where we are at 330, and then above we have 350. So what does that look like on the chart? 350, 300, 330. Oops. Okay, and that's pretty similar to what I just said, right? Upper bound, lower bound. That lower bound's a little low. We would probably be more comfortable with, say, 310. Let's see if there's a gamma pocket there. 310. There's another very large gamma pocket, not as big as 300, but 310. So here's what I would say. This is the information that I just got. So what I got was, if it breaks above 330, okay, which we closed a little bit below that today, if it breaks above, we're still restricted by this high, which is pretty close to 350. So I would not buy a breakout on 345, which was this high right here, because we have 350 immediately on top of it. So actually, to refine my plan, the one that I just told you guys earlier, is I shouldn't put my upper resistance at my breakout point at 345 at the high. I should actually put it at 350. If it breaks 350, golden. So that's part one. Part two, 330 might be sticky. We could just consolidate here for a while. So I'm not going to expect that there's going to be a big move up towards 350 or a big move down towards 311 or 312. Okay, no, we saw that gamma pocket at 310, so I'm going to mark it at 310. Okay, if it breaks 310, I'm not going to be too concerned, because the biggest gamma pocket that we saw was at 300. That's going to be support. So what that means is I'm not going to expect this gap to fill. I know a lot of you guys are gap fill traders. Say, hey, I'll fill the gap. It has to fill the gap. Eventually it fills the gap. The problem is that eventually is on the scale of several years. Eventually, a decade later, maybe we'll come and we'll fill this gap. Okay, so I'm not going to expect a gap fill anytime soon. I'm going to expect that 300 to be a strong support that's going to be difficult to get through. So given that, I could, if I thought just say right, if I see a rejection of 330 down to 310, I could be comfortable entering here on a long, using 310 as my stop loss because I see its strong support right there, and I can't do any. I mean, it's at an all-time high, so I don't have anything else to give me levels here. So what do I put my stop loss way down here? Do I put like, how do I set a stop loss? Gamma is giving me the perfect stop loss right here. If I enter at 310, I've got a 300 stop loss, and I'm just talking equities here. We're not going to complicate it with options right now. So I want at least a 1-to-1 reward risk ratio. In this case, since I'm doing equities and because I don't have really strong technicals to back me up, I only have the gamma to back me up, I want to look for a 2-to-1 reward risk ratio. And so I'm risking 10. What would I want? I would want 20. So, and where does 20 take me? It takes me perfectly to 330. So this would be a wonderful long position right here. If I could enter, if it pulls back to 310, then I target 330 on my long, or I target 330, and then I stop myself out at 300 because I have strong gamma support here and I have gamma resistance right here. That's a beautiful 2-to-1 reward risk ratio trade right there. And then I can leave a runner and say, hey, it might actually go up to 350. And then on my runner, so the implication is that if I have a runner, that means that I won, right? So that means at that point, that runner, I can move my stop up here to 320. And I'm going to have this trade right here. Okay, so again, that'd be 20 versus 10 right there. So even if this runner goes back down to 320, I still made $10 on it when I stop out. Okay, so that's the type of information that you get through gamma, and you can start making really nice little trading plans like this. And then if it breaks out at 350, then you're off to the races. Then you have a new trade on your hands. Okay, so that's a way that I could play this scenario. So where normally I'd be waiting for that breakout and not playing Oracle at all, now because I have all this gamma information, I just came up with a way that I can trade Oracle while I'm waiting for that breakout to happen. Okay, so that was cool. Thank you for that. And we can do this on GE and BP as well. Gamma Pockets is stock picking service. Get scanner, evaluate the stocks yourself. Yes, you got it. You got it, Dan. But except I will teach you how to use the software and pick stocks for yourself. And not just pick stocks for yourself, is to evaluate. So if someone gives you, like for example, if someone gave you GE in your service, and they say, oh, let's go long GE, then I can throw up here and say, hey, is the market maker going to help me in this trade? Just because the answer is no, doesn't mean it's a bad trade. But if the market maker is there helping me, I can expect to make money even faster. Right? So that's what this means. So GE does look like there's some market maker like that. That's very bullish because where we are right here, we've got that gamma pocket right here. Did we trade up? Yeah, we traded up to that gamma pocket today. Okay. So that pinned. If we break this pin, it could easily go to 290 because look, it's almost basically just as strong at 290 and just as strong at 300. So this thing has potential to run up to 300. So this is really good. So whoever gave me that trade alert, I'd be like, yeah, this looks like a great, at least from a gamma perspective, it looks like a great trade. And then I could look at my technicals as well, my price action, and just say, beautiful, strong uptrend. It's at 283 right now. We're at a current gamma pocket. There was another one at 290. There was another one at 300. This thing looks like it could easily hit that. Okay, so that gives me extra confidence in that trade. Got an alert on platform X yesterday for BP. Okay, cool. BP, same thing, breakout, pullback, out, breakout. So this does look like a change of trend into a long-term bullish Okay, we do have some resistance where this high was, but we pulled back and maybe you'll bounce and at the very least retest that resistance and maybe break out of it. So let's see what Gamma says about that. And yeah, we have a Gamma pocket just above where we are right now at 35. But if we can break above 35, and if Platform X is saying it's got momentum, then maybe we can break through 35. Then we've got nice Gamma dragging it upwards towards 36 and 37. Okay, so this is looking pretty good as well. If I look at 36 and 37, okay, 37 is up here, and 36 is right there. And so that would be kind of challenging these highs over here. So, or actually break a little bit above these highs right here. So the current 35 is the strong technical resistance right here. So if we do 35, okay, so we're not quite at 35. There was the largest Gamma pocket at 35, and it also coincides with supply on the chart. Okay, so it was 35 was sold here. 35 was sold here, 35 was sold here, 35 consolidated right here, 35 consolidated right here, consolidated right here, consolidated right here. So 35 is going to be kind of difficult resistance, or potentially a strong resistance. So 35, if you entered today on that signal, great. Maybe you entered towards the beginning of the day, you already made some money. 35, maybe you want to have a short-term target, or you take some profits and then you leave runners just in case it can bust above that 35 and get to 36 and get to 37. Or what you could do is take profits at 35, and if it dinks around there for a little bit, if it pins there for a little bit, and then it breaks up, then you go back in and you target 36, 37. So the software really helps you develop a plan and set up expectations. Oh, do I think that this can run super high, or do I see potential resistance areas? And that way I'm emotionally prepared and I can come up with a plan and say, oh, if I hit 35, I'm not going to be surprised if it chops around for a little bit. So am I willing to wait and maybe go to 36 and 37? Well, that's going to depend on my option expiration partially, right? Or my trading personality type. Am I the type of person who likes to be in a trade for 2-3 weeks? Or do I really want to be just there for the quick wins at 1 day, 2 day, 3 days? Okay, so this could be a 2-day trade and hit that 35. But then if I see a breakout at 35, I could re-enter and target 36 and 37. Okay, great. I'll take a look at MLS in just a moment. When Kirk got shot, did it bullish? Did what bullish? The whole market? The market doesn't care about politics. It's terrible that Kirk got shot, but the market doesn't care about politics. So you're not going to see a reaction in the market. Did the market makers lose big time when a stock like Oracle gaps up so quick, as they have no time to hedge? Not necessarily, but maybe. It's definitely possible. Generally, they don't because they have earnings, or they are prepared. They know earnings is coming up. They can prepare, and they'll set their implied volatility, and they'll set their premium pricing on the options. And yeah, they might. Okay, they might have lost money here. But just like for traders, losing money in and of itself is not a terrible thing. It's just you can't lose so much money that you're out of business and you can't keep on trading, or you can't continue your business. So in trading, we can't lose so much money. We cannot. If I have a $10,000 account, I can't put $10,000 on a single options position, because that option has the potential to go to zero. And if it does, and just say I put it all in puts right here and it did this, then I'm screwed. I can't trade again. I'm done. I'm bankrupt. My account is bankrupt. If the market maker does that, then they're done. They collapse. They're dead. So if they survive that, just like if I survive, if I had a $10,000 account and I put $1,000 in it and I lose my $1,000, I survive that. I still have $9,000 I can trade and I can make it up. Well, the market maker, if they lost money here, they can make it up. How do they make it up? I will show you. Okay, so is this one day before? I missed it by a day. Okay, just so from April 2nd to April 3rd, that was Liberation Day. And then we have, let's move one more bar. Okay, then we have this. Then we have that, okay? 3 days. Liberation Day announced, bam, gap down, gap down, gap down, recover some. Let's see what the VIX was on April 2nd. Okay, it was way down here, April 2nd. It was at 22, then it jumped up to 26, then it jumped up to 44, and then it jumped up to, well, somewhere up here, and then it ended at 47. So on the 2nd, all the options that they sold right here, any puts that they sold right here, that market maker got hit hard, okay? Same if they sold any puts right here, they got hit hard, and that's why they start jacking up that volatility higher and higher. They're making it more and more expensive. And then on the 4th, okay, they may or may not have lost money here because this volatility is now so high and covers such a wide range. And at the S&P 500, same thing. Huge range, okay? So what I want to see now is on the VIX, how long was VIX elevated? In other words, how long did it take for us to get back to 20s, okay? Okay, basically to here, all the way until May 9th, so a month later. Okay, and now the question that I want to ask is, how long did it take before the bars, the size of these bars, went back to the same as they were before April 2nd? Okay, so big bar, including gaps, big gap, bar, big gap, larger bar, no gap, but huge bar, huge bar, huge bar, big bar, kind of normal size bar, normal, normal, small, small, normal, 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 small, 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 small. You see that? So what happened was volatility, implied volatility remained really high all the way until May 9th. But the price action, the actual realized volatility normalized by April 14th. So for 3 weeks, options market makers were making options really expensive, even though the price action had normalized, even though the size of these bars went back to normal over here. So basically, they got their butts handed to them, maybe they got their butts handed to them. They're making money, they're making a crap ton of money because they're still charging super high prices when actual volatility is still low. Super high prices all the way until May 9th, even though volatility is still low, and people are just taking those prices. And so they've made their money back. Why? Because they had 3 weeks of extremely elevated prices, even though the volatility wasn't there. So that's like saying, okay, eggs are scarce. I'm a grocery store And suddenly it costs me $20 for a dozen eggs. And so I have to pass that price on to you, and I charge you $30. And it's $30 and $30. Everyone's paying $30 for my eggs. And suddenly the cost of my eggs isn't $20 anymore. It's down at $2. But I'm still charging $30. And for 3 weeks, even though my cost is only $2, I'm charging $30. I'm making buttloads of money at that time. And it didn't matter that if maybe initially, I had eggs that I sold at $10, and the market was, only supporting me with $5, and I was losing money at the beginning for a little bit, because for 3 weeks straight, I was making $28 per dozen of eggs. So I more than made up for that loss at the front. That's what market makers do. Okay, so it doesn't matter to that Oracle market maker, because what will happen is the IV on Oracle will remain elevated for a small period of time. So if I go over here and I go to Oracle, there was unfortunately we can't see it, but you can see that. See, before Oracle released earnings, I'm sure this is well above 100. But look at, even though it's dropped down to 98, look at next week's volatility, 64, 65. So that means I'm paying extra volatility for all the way into next week. But isn't that 65 still above all of these? All of these are averaging about 55. Okay, so for a whole week, I'm paying extra in volatility, even though we're expecting it to go down to 55. So even though the earnings is long gone, next week, earnings is, no one's going to be talking about Oracle earnings anymore next week. It's not going to be influencing the price anymore. But that IV is going to be elevated for that next week because that's how market makers operate. So if they happen to make money on Oracle, great, they'll still make buttloads of money right here. And if they lost money on Oracle, doesn't matter. They'll make it up in the next 2 weeks because implied volatility won't drop to normal levels for another week or two. Okay, so it doesn't matter if they lost money there. Okay. Let's see. I'll go back to MOS in a bit. This should be a non-political form. Okay. Dan, GEX scanner feature request, put expirations to the right of the GEX chart with the ability to turn on and off specific. Yeah, I'll make note of that, and I'll obviously have to be for future updates, but yeah, okay. Hi, Cat Noir. Is trading worth learning? Well, you'll get what you put into it. So if you really want to learn and you put the time and effort and energy into it, it can absolutely be very, very profitable. Just depends if you want to put the energy and effort into it, though. A lot of people, so there's only one way to lose in life and in trading. Okay? It's the same thing, and in sports and anything else. The only way you lose is you quit. And actually, technically, the only way to lose is to quit while you're a loser. Okay? Very few people quit while they're a winner. But the only way to lose is to quit when you're a loser. And here's what I mean by that. I got an email today that I just saw right before I came onto this live stream. I haven't had a chance to reply to him yet. But basically, let's just say you have a 70% chance win rate. And every time you win $1, and every time you lose $1. Okay, so that's a profitable system. So I'm going to do equals rand. I'm going to simulate that by doing a random number. Then I make $1, else I lose $1. Okay. So let's do this 100 times. Oh, that's weird. Okay, so now I have a list of randoms, ones, and negative ones, okay? And so I'm going to lock this down so it doesn't keep changing. So I'm going to just copy and paste values. Okay, so now I want to know, okay, I want to know how many times you won. And I messed that up. I obviously reversed my formula. So let's do that. If it's greater or equal to 0.3, there we go. Then we would win 70% of the time, and we would lose 30% of the time. Okay, so now I want to know how many times we win. Okay, and so in this particular sequence of 100, we got a little bit lucky. We won a little bit more than we expected to. We won 74 times. Okay, we lost 26 times. And since every time we win, it's $1, every time we lose, it's minus $1, then what I've made here was $48. Okay. Okay. Now, let's just say you started the program with trade number 1. And you win, and you win, and you win, and you win, and then you lose, then you win, then you win, then you win, and you go, Kane, this program is amazing. You're God's gift to trading. Look at this. We just won 7 out of 8 trades. That is amazing. What is 7 out of 8? Okay, that is 87.5%. You told me I was going to win 70% of the time. We won 87.5% of the time. I'm super happy with the program. My response will always be, congratulations. I'm glad that you're making a lot of money. Okay, our expectation is that, it'll revert back towards 70%. So don't get too excited. Okay, the system is really profitable. Over the life of all the trades, you can expect closer to 70%. So you might go on a little losing streak at some point in time. Okay, that's what I'd be telling you. Okay, we can't get too excited. The trading has to be an unemotional event. Because if you get too excited, then what will happen is you'll get disappointed when this reverts back down to 70%. Okay, so what will happen is that you'll hit maybe this pocket. Okay, and now we've won, how many is that? 4. So we've won 10, 4, 5, 5 versus 9. 5 versus 9, yeah, okay. So that would be 5 divided by 4, about 80%. Okay, so now your win rate is a lot lower. You're like, oh, I lost a lot. Then you're gonna lose enthusiasm, and you're gonna be like, oh, wasn't as amazing as I thought it was. And my answer would be, yeah, I told you you're gonna win about 70%. So you got too excited when you saw that 87.5. But what if you started right here on trade 34? You lose, then you win, then you lose, then you lose, then you lose. And then you go to me, Kane, 5 trades. That's big enough sample for me. I hate losing. I keep losing here. I've only won 20% of the time. You told me I would win 70% of the time. You're a liar, you're a cheater, you're a scam, you suck. And my answer would be, you haven't given it enough trades. Give it 100, give it 20, 30, 40 trades. We'll see what happens, because the expectation is not in the next trade. If I have this system right here, my expectation was a 70% win rate. Okay, I'm going to win 70% of my trades. That does not mean, okay, this is where everyone makes the big mistake. A 70% win rate, right? And in this case, in the first 100 is actually better than 70%, even though our system expectation was 70%. Our 70% win rate does not mean when I do this trade, I have a 70% chance of winning. It's not, those two statements do not equal the same thing. It does not mean that when I put the next trade, I have a 70% chance of winning. And it does not mean if I do the next trade, I have a 70% chance of winning. It does not mean that. If it meant that, then every group of 5 or 10, I would win 7, okay? 7 minus 3, this would add up to 4, okay? That one happened to work out, but what about that? Okay, that one happened to work out too, okay? But they're not all gonna work out like that, okay? So look at this one. I only lost 1 out of these 10, 90%. Okay, so it doesn't mean that each trade has a 70% chance of winning. It doesn't mean that. It means that the whole system has a 70% chance of winning. And that means I need many trades in order for me to see that 70%. Not 1 trade, not 2 trades, not 3 trades, not 5 trades, not 10 trades. Okay, as we saw in this third group, 10 trades wasn't enough. It gave me a hugely skewed expectation if I did that. Okay. Why? Because 90% win rate. That's why. What if I did this sequence of, is that 10? 10 trades, 100% win rate. Is that realistic? What about this sequence of 10? Okay, 50% win rate. 10 is not enough to evaluate either. So I need a large number of trades in order to build up that expectation. So if you keep on trading this and you stick it out to 100 trades, I guess only 98 trades, you make money. And let's just say you quit at this point. Well, you quit a winner because you made money. But no one ever quits a winner. People don't quit when they're winning. People don't quit when they're making money. They quit when they're losing money. Okay, so if you did this and you say, this program sucks, Kane, I lost 4 out of 6 trades, I'm down $2, okay, and I thought this was going to be profitable, you suck, I quit. Great, you just quit a loser. If you have a profitable system, if you have a winning system, if you have a proven system, the only way you can lose is if you quit while you're a loser, while you've lost money. And unfortunately, that's when people quit. They only quit because they're losing money. Okay? So the answer is either you have to trust that you're being presented a winning system, or the guru or the expert or whatever you want to call the guy proves to you that it's a winning system. It's hard to prove a winning system. Basically, we can only use statistics and say, look, I've been trading this thing for 10 years and we've done 1,000 trades and here are the results. Okay. But no one ever cares about that, because what happens is when they start trading it, they might start at a time like this and like, Kane, you lied, you suck, I lost 4 out of 6 trades, I quit. You quit a loser because you did not either understand that the statistics are on the system and not each individual trade, or you did not have the wherewithal to stick it out and let the statistics play in your favor. Because after this sequence where you've lost $2, 4 more trades later, you're up $2. And then 10, 15, 20 more trades later, you're up $12. Okay? And then you wouldn't be a loser anymore. Then you might be kind of happy and you might kind of forget about your starting hiccup. You just happen to enter during a down phase in the system. And so the only way you lose when you have a winning system is if you quit while you're a loser. Okay, so basically the only way you lose is if you quit. If you keep on playing, if you keep on going, if you keep on trusting the system and the system remains a winning system, sometimes conditions change, right? Sometimes systems get blown up or get blown out because the market environment changes, is completely different. But then you need a guru or an expert that can recognize that and say, okay, well, the time for the system has passed. Maybe it's completely dead and we'll never trade it again. Or in this particular season, for this particular 1 or 2 years, we need to concentrate on a different system that operates on a different edge in the market because we are in a different business cycle. So you would want to your expert that's providing you the system to be able to recognize that about their system. Okay, I forgot why we're talking about this, but is it worth learning to trade? Was that the question? Okay, so yeah, basically the only way, if you find a winning system and you have a person leading that system who can recognize when conditions are right or wrong for that system and give you a lot of trades when conditions are right and give you just a couple of trades or no trades when conditions are wrong, then the only way you can end up a loser is if you quit while you're in a losing streak. Okay, so that's my tirade or education point on how to become a winning trader. Okay, let's see. Let me quickly answer all your questions. We are over time. I apologize for extending this. I will look at MOS. Yes, it is a lifelong learning exercise. Really passionate about trades, and I've been told trading is the place to be. How long will it take to learn and then become profitable? That really depends on you, right? That really depends on, number one, who you're listening to. So if you're listening to someone who's really good, who has real experience and knows what they're doing and is able to pass that knowledge down to you, that's going to decrease your learning time significantly. If I can show you all the mistakes not to make, your amount of learning time is going to be cut by a huge margin. And you're starting out, if you choose to listen to the right person and no one else, then you will never get the wrong ideas. So if you say, hey, I'm going to listen to Kane, and Kane has over 20 years of experience and he's helped manage 1.7 trillion in funds and used to trade $200 billion a day, that might be a pretty good person to listen to, and I decide I'm going to listen to him. Well, maybe I should not listen to other people, because if I listen to someone else and they happen to tell you something that is very wrong, but is common in the internet culture or common in the industry, like these lies that we tell each other or that we convince ourselves are correct, that's going to start setting you back. So you want to find the right person to listen to and stick to that person, or maybe 2 or 3 guys who are really good, and just listen to those people. Don't listen to anyone else. If I go to a martial arts class and I go, hey, I'm going to learn jujitsu, I'm going to follow that jujitsu teacher. I'm not going to go to 5 different gyms and go to 5 different jujitsu teachers. And I'm definitely not going to go to 5 different gyms and learn kung fu and karate and taekwondo and judo at the same time I'm doing jujitsu. It'd be stupid. I'll get so confused. You're not going to make any progress. So what you would want to do is just stick to 1 or 2 guys, maybe 3, as long as they're similar, as long as they have similar types of experience and they're teaching you the same edge in the markets. So who do you listen to is the most important. Number 2 is how teachable are you? Are you willing to learn? You're probably very willing to learn if you've been listening to me talk for the last hour and 15 minutes. But then are you willing to change? If you hear something that I tell you about that clashes with something that you heard before, are you willing to change your mind about it? Or are you going to be stubborn and say, no, that's not what I heard before? Kane, you don't know what you're saying. I don't care that you've traded $200 billion a day. It doesn't matter. I heard this on the internet. 50 other people on the internet say this. Great. You're not going to learn anything. Okay. So your mindset is going to be extremely important on reducing your learning curve. Okay, the third thing that is going to be important to you is what you focus on. Most people will focus on, here's the chart. Let me pull up a chart. Here's, oh, Oracle is up today. Oracle is down today. Is this a head and shoulders pattern? Is this a cup and... You never hear me talk about that. I only talk about a very few, very fundamental things. I talk about areas of supply and demand, which I call liquidity pockets. I talk about gamma pockets, which are areas of high risk for the market maker. And then I talk about a few trends. And what you hear me talk about all the time on this particular channel is short-term reverting to the long-term trend. Okay? Short-term reverting to the long-term trend. Okay? You also hear me talk about the four proper pieces of a trading plan. All right? That you have your trade idea, you have your timing, your execution, and your trade management. There's only very few basic things that I ever talk about because those are only things that are really, really, really important. And then, so you want to just get those few basic things down. And then after that, beyond that, it's all mindset. It's all mindset. Do I get excited? Do I get fearful? Do I get greedy? Do I revenge trade? It's all mindset. Can I be steady and unemotional in my trading? Can I properly allocate every single time in my trading? Can I be disciplined and make a trading plan every time in my trading? Can I follow that trading plan? Like I caught myself when someone asked me about OKLO. I caught myself. Can I be disciplined? Can I be aware? Can I catch myself if I start falling into the trap that everyone, it's in our nature. It's in our nature to fall into those traps. But can I be aware of them and catch myself before I click the button on my mouse and actually execute on something that was outside of my plan? And then lastly, do you stick with it long enough so that becomes second nature? When someone asks me a question, even it's completely out of the blue and completely unrelated to what I was saying, can I answer the question? And if I can I answer it competently? And can I give a truthful answer? And can I give it immediately? So that speaks to my competence, right? So my competence level, I've been doing this long enough, looking at the same things long enough and looking at the same basics, fundamentals inside of the markets and understanding the fundamentals of the markets long enough that I can just blurt it out, right? So I never need any preparation for any of these sessions because, because I already know it. I already know it well enough that I can teach it. So those four things are going to determine how quickly and how deeply you learn the material and then how well you'll be able to trade. Okay. Trust the system. Yes. You have to look at it as numbers and not money. That's one way to do it. Some people gamify it and it's just a score. How much money I'm making. It's just like if I'm playing a video game, how many points am I collecting? Some people do that. That is a good way to do it also. The example does not reflect that our gains are smaller than our losers. In this example, okay, in some systems, did I close it? I closed it. Some systems, the gains are smaller than losers, but every system's different, okay? So some systems, the gains are way bigger than the losers, and other systems, the gains are smaller than losers. And that speaks to your reward risk ratio. That's why when we were looking at that example with Oracle, I told you if I was going to trade this equity, then I would look for 2-to-1 reward risk ratio, in which case my wins would be larger than my losers if I was consistent across that. Some systems do have smaller gains than than losers. So it just depends which system you're talking about. What I showed was just an example. It wasn't a real system. It was, let's assume that you win on average 70% of the time, and on average you win the same amount as when you lose. That was an example of a winning system. If you had that, you have positive expectancy. So any system needs to have positive expectancy, and it needs to have significantly positive expectancy. Otherwise, it's not worth your time, effort, or energy. If it takes me 1,000 trades to expect to win $5, then why would I trade that system? I would want a system that after 1,000 trades, I can make several $1,000s. Probably more than that if it's 1,000 trades. So I would want a very high. So, or in other words, if my expectancy on the system is only 0.2%, why? It's not worth my time. My expectancy on the system should be like 20%, 10%, 30%, something like that, or higher, in order for it be to worth my while. Either to sit here every day, look at these charts and put money into it, go back and forth, right? The whole point is to make money. So yeah, you want to as positive expectancy as you can get. Okay. Wrong expectations is another failure for trader. That's true, yes. Any bonus trade you would like to share today? I went way over time. So unfortunately, no. I mean, you could take that Oracle trade. I mean, I can't advise that you take, but it's a good setup. It's a good setup. I like the setup. If you like that, then you could trade that also. I'm not going to have time to find another opportunity today. Will the GEX scanner be available after a Saturday class separate from the Gamma Pockets program? Yes. So unless you are a Diamond member, which means that you get lifetime access to anything, absolutely anything that I ever put out, then yes, it is a separate program. And it should be available after Saturday, yeah. All right, Kat Noir, have a great day. And you should always start on a size of capital you can afford. As your account grows, you can, yes, that's very true, Bob, very true. Do you suggest any trading tracking mechanism? I have my own methodology for tracking my trades. Maybe one of these days I'll share with you guys, maybe tomorrow, I'll share with you guys how I track my trades. Some people use things like TraderSync is very popular, and I hear really great things about it. I like tracking I'm old school, okay? I don't like these things that journal for you automatically because I'm old school. I have to touch and feel and interact with my positions. And if everything's being done automatically for me, then I lose a huge portion of awareness of my portfolios. So I do everything by hand. So I do a combination of spreadsheets and paper. So I could just do spreadsheets or I could just do paper, but I do both because it forces me to look at it twice and it forces me to look at it two different ways. So I really know my positions. Like I said, that's just me. That's how I was trained. That's how I was able to handle $200 billion a day and be able to remember all the positions. Yeah, I had to force myself to interact with my positions over and over again so that I would be familiar with them. So that's what I do. That's you don't have to do, like, obviously TraderSync works for a lot of people. Otherwise they wouldn't be making money, and or in similar programs to that. But I'm old school. I do paper and Excel. Okay, so that's it. Oh, I promise MOS. I will deliver on my promise. MOS is technically not looking particularly interesting. It is kind of chopping sideways in no man's land. It could go up and challenge that MA50. So if you wanted to go long, maybe I would say, okay, maybe you could just take that up to the MA50. If we look at the Gamma software, where'd it go? Okay, if we look for MOS, yeah, so we've got a Gamma Pocket support down here at 3250. We got a Gamma Pocket up here at 35.5. Major level at that 35.5. So yeah, we could expect this, especially today, it did move pretty strongly, and it's still in middle of nowhere. So this is still finding liquidity. So this will probably continue to move at least to 34, more likely 35 based on gamma. And let's see what that 35 level happens to be. Okay, so a little bit above the MA50. And then 34 would be a little below the MA50. Okay, so, and actually coincides, 34 is a pretty important level, actually. You got some consolidation right here, baby, tiny bit of consolidation right there, and you got a rejection of that level, 1, 2, 3 bars right here. So 34, I would probably, if I was going to trade Mosaic, I would only trade it to 34 or the MA50. I wouldn't bother with the 35. 35 is great. It just helps us get up there, but I wouldn't necessarily count on it because it could get caught at 34 or the MA50 for a little bit, reject before it goes up to 35. That's why I wouldn't immediately target 35. I would just target 34 on something like Mosaic. And then later, if it rejects, then I can look at 35 later on. Yeah. All right, guys. That's going to be it for today. We went almost half an hour overboard. So thanks for sticking with me. Hopefully you guys are learning a whole bunch and getting a lot of value out of these. And hopefully I'll see you guys on Saturday. Let me give you guys that link again where we're just really going to showcase and give you a great introduction to the Gamma software. All right, bye guys. Have a great, wonderful rest of your day, and I will see you